is up, my fellow goons? Here again with David for another episode of Jack of All Trades. How's it going over there?
Yeah, it's going. I put up a lot of LEDs in my house. Looks like you did too.
I know. I turned my light off because I felt left out. You turned your thing on, your background's all purple. I was like, well, fuck. my LED's going.
Yes.
You got an LED mic now. I'm jealous.
That's right.
To ask for one of those for Christmas or something.
Yeah, there you go. The new one's the new one's RGB.
Oh yeah.
Yeah. This one was on sale.
You can never have enough LEDs. I got them all. That's hilarious.
Yeah.
All right. So I want to talk about. You what?
I just put LEDs in my living room, my kitchen, just to test it out. And then now that I know it's the setup works, the rest of the house is soon.
Nice. Yeah, I can't do that because my wife will kill me, so I just keep everything confined to my office.
Yeah, you might.
Yeah. All right. So this episode, I kind of want to talk about like sizing in, sizing out, like when to use full size, when to use partial size, and stuff on your trades. So this is probably like a little bit more of an advanced topic, but I think it's still pretty important because, a lot of people don't even realize that like you can, size into a trade slowly or size out of a trade slowly. Everybody thinks, you just buy it and sell it and, one big lot, and that's the way it goes. So the best, like the safest way to do it a lot of the times, and I'll go through it, it depends on the setup, is like, you want to kind of add into your trade a little bit. And keep in mind, again, this is a trade. This isn't investing. So this is like a shorter time frame over like week or month or within the day or whatever. You want to kind of like add in a little bit, and then you want to add in more like once you know you're right. And the only way you're going to know you're right is by, back testing everything, trading for a long time, and, figuring out what your system is. So like that's kind of be up to you guys. But assuming you're at that point, I'm just going to kind of show you like roughly how I do it, and you guys can kind of apply that to your own trading styles. So we're going to go over to Paint here again because that's my favorite thing in the world to explain stuff on.
App of professionals.
So like, it's the best, man. It's so simple and like it's just easy. Like I just use the little pencil thing, and that's it. That's all I need.
I think that was like the first app on a Mac too. Like ever. It was like,
do they have it on Mac? I thought it was just a Microsoft thing.
Well, they have a version of Paint, but that was the selling point when Steve did the original Mac presentation. Is like there's the Paint, and he drew like this thing. People were like, ooh. Because back then everyone was text, right?
Was it Paint like way back in the day when with Paint where it had like the different races? There was one that was like the explosion and stuff. Was that Paint?
Oh, I don't know. I can't remember now.
Do you remember that? I had that when I was in like elementary school. Like if you wanted to erase your whole screen, there was like a bomb, or there was like I don't know, it was like a car. Like there was all these weird things. Yeah, I don't know. I swear it was Paint, like the original version.
What school did you go to? Terrorist organization?
Apparently not a very good one. All right, so I'll kind of go through this a little bit here, and David, you can chime in if you want to talk about like how you trade in any of your swings and stuff. So I'm going to talk about this on the short side because you guys know I'm predominantly like a short seller. So basically, like when it comes to sizing, you really want to be able to determine like where you're at in the trade. Like where's the chart at? Like is that at a point where you can feel safe going all in? Where's your risk levels? Is the chart like really broken down, or is it still strong? Depending if you're long and short. So I'll just draw like just a general kind of uptrend sort of thing. Actually,
wait,
get my line weight a little bit bigger here.
I don't want to ruin your presentation, but do you think that the recent Tesla chart would be a good example because it sold off really hard going into the last weekend, going into the Monday? Remember, it popped last week, and then he said he was going to sell on the weekend, and it dropped. So then because I got messages all over the weekend from people saying, "Oh, is this an entry point, or should I be buying this and that?" Would that be a good example?
Yeah, maybe we can kind of look at that after. I just want to show like a really just loose example on like just on this first. So like for me, basically like so there's the front side and there's the back side of any trend movement. We talked about this. I think it was like last week or 2 weeks ago when we were looking at the Tesla chart originally, where we drew that uptrend line, and then you could see where it reclaimed. As soon as it reclaims that line, it takes off, right? So that's one of the things you guys want to be looking at if you're a long trader is really following that trend line. And I've said in the past a bunch of times that I don't like trend lines, like diagonal lines, and I still don't, because a lot of people just screw them up and they don't know how to draw them properly. We went through that again in that Tesla thing. So like if you guys haven't watched that, you should definitely watch that, because I think that's like a really key way where like we walk through like how to determine what is the actual front side of a move, because if you draw the wrong line, it totally screws up your trade. So I'll leave that with you guys to go kind of watch that. But like on something like this, if we were to look at, general front side, like I'd say that's, say that's the front side of the trade, right? Or the front side of the trend. So let me make that red. Oh, hold on here.
And I'll
Paint's
give you an
great, but I'm
example
not that good at it.
of what you were just saying before. It's happened. My old OG crypto group. So once in a while they messaged and they said, "Oh, we're doing an ascending wedge. It's like a triangle that goes up that way, right? Usually the price falls down after." But they drew it wrong. I looked at it real quick, and what they did was that they made the wedge too large. And I'm like, if you make it smaller, you actually did the wedge. It fell out, and it's already reclaimed. So they were expecting to fall when it's probably going to start going up. So it's like you're right. It's a huge difference.
Yeah, so you really need to know, like it takes a long time to figure out exactly where these lines are drawn. And that's why I love the line chart. Like you guys, like anybody that's watching a show for a while knows that like every time I look at charts, I always use the line chart, because it just cuts out all the noise. Like there's no wicks, there's no candles closing in weird spots or whatever. It's just the main basis of the movement. So like the line chart, in my opinion, is if you're gonna draw trend lines, use the line chart. Like it cuts out all the noise, it makes it so much easier, like it's so much clearer, and it's a lot harder to make a mistake and draw the line in the wrong spot, in my opinion. That's what I use for all my trading, is a line chart. So yeah, so for something like this, let's just say you have a bunch of history on the chart. Like when you're a short seller, you're always looking for overhead, right? Like you're looking for overhead resistance. Like where are people that are stuck in this stock? Like where are they going to be trying to get out, right? Like where's people that bought this thing 6 months ago and then it tanked and then it's coming back up? Like where's the volume levels on that these people are going to want to sell at? So let's just say for argument's sake, you have some lines. I don't know, like you have, say, like a line here, just for example.
Hey,
There's a line there,
Oh,
and then like another line. Yeah.
oh, never mind. Sorry.
What's up?
No, I just
Yeah. So
realized something, but you were already doing it.
Oh, okay. So yeah, like let's just say that like these two red lines coincide to some daily candles 3 months ago, where the stock spiked up and then it sold off really hard on big volume. So like there's a lot of people at these levels that are way underwater on the stock, and they're trying to find an exit for break even, right? So what I look for is, as the stock's coming up, coming up, coming up, this is all still front side. So whenever you're trading a stock on the front side, if you're going to trade it long, then you can hold on. But if you're going to trade it short, you got to be in and out quick, right? Like if you're shorting into this first line, like let's say you're shorting like right into here, like right into this top, you don't want to be shorting here full size and aiming, for a big crackdown, covered down here, because that's how you're going to get killed, because it's still the front side of the move. The longs are still in control, so you don't want to be doing that. Whenever you're trading a stock on the front side, you always want to be using smaller size. You can still get in, you just don't want to be going in full size, because that's when, again, the longs are in control. Like shorts don't have the edge, so you have to be careful. So for me, like I'll trade front side very infrequently, because it's not really worth the risk reward to me. Usually when I am, it's because we're getting near like a major level, and I think the stock is like really overextended and is close to breaking down anyways. So like let's just say, for example, your average size is like 1,000 shares, just for argument's sake. You really only want to be trading like maybe 20 or 30% of your size up here. So like you'd only want to be taking a position that's maybe like 200 or 300 shares, because you don't want to risk, you don't want to fight this thing full size and lose, because you could try and trade into this size full size, or into this line, and then you hold on to it and you get this little dip and you don't cover, and then it rips through, and then you stop out over here for a loss, and then your next line's up here, so you're like, oh, okay, well, let's maybe get like a little bit of a wick off of this peak, and then you re-enter up here, and then you're trying to cover maybe down into this support, but then you just get this little dip and it comes up, and then you cover out again for a loss. right? So like if you're trying to trade these things on the front side, full size, like you're just going to end up getting chewed up. So you want to be in and out really quick on the front side. You don't want to be full size. Don't try and be a hero and top take the thing and ride it all the way down to the bottom, because that's not the way to make money. That's the way to try and be right, but you're not going to make money. So
I've tried it.
the best way, yeah, like it's great when it happens, but like you'll lose $10,000 trying to make $1,000. It's not worth it.
I've done it like 1 out of 10 tries.
Yeah, it's just like that one chart that you save and you're like, oh yeah, I did that. You just ignore it after that.
Exactly.
It just doesn't happen after.
See that? That's the one time I didn't die.
Yeah, exactly. So the best way to go about these things is, again, like you just trade really small size on the front side. Now, if you're a long, it's a complete opposite, right? Like if you're a long, you want to be going in basically full size in these. And now this is where sizing in comes into play, right? So like let's just say, you've drawn this uptrend line, like, right? So you've drawn this line, in this kind of area. The stock has kind of touched in, it's broken out here. We come up to this peak, that the next resistance line is way up here, right? So you still got like a lot of breathing room. So when the stock pulls back down, what you can do is you can size in a little bit here, try and get in a little bit above the line. This is just the way I do it. A little bit on the line and then maybe a little bit below the line. Again, only like 30% of your size, maybe 40%, something like that. Because you're trying to see if it's going to work, right? Because this thing, it could just rip through here and just dump right down, and then you're going to lose. You're going to lose big time. So if you're a long trader, size in small, and then once you see the stock turn around, once you see it starting to confirm and that volume starts to come in, this is where you can get in full size. That's when you throw your size at it, and then it's just literally as simple as just selling up into that next resistance level. So right here, you pretty much want to be all out of the trade. Like that's your next resistance line. So that's it, right? Get out of the trade. Again, don't try and be a hero. Don't try and hold your whole lot up to this next line, because you don't know if it's going to get there, right? Like that line could reject and it could just stuff back down, and you were $2, $3, $4 in the green in that trade, and then all of a sudden you sell for a loss. So you don't want to be that guy. So just, sell it into the next line, just sell it into the resistance level. Don't be greedy, because once you guys have a system where that this thing works, 9 out of 10 times, like, David and I have built our own systems, and like we're confident that our stuff works really well. You're just, it's so much easier just to take that little piece of the move. Like I can't tell you how many times, like, I do a short and I make, maybe I'll make 50 cents, and then the stock sells off another $15 over the next few days. Like it happens to me all the time, right? But like for every time that the stock sells off $15 and I only made 50 cents, there's 20 different times where after I made my 50 cents, it reclaims and it shoots up $15 higher. So it's not worth it, right? You just want to like learn how to take a certain piece of the move and just learn how to do it over and over and over again without even thinking. Like that's the way that you guys are going to make money in the stock market if you're a trader. So if we flip back over to short selling on this particular chart, I'm just going to extend this line here. Oh, that is not the one I wanted to use. Hold on here.
I think it goes back to like it being my mindset thing. Cause like I think most people could find a strategy that works, or take someone else's that works. But the problem is like if you don't have the confidence, you don't have the experience of doing those trades over and over again, you think, well, this is it. This is the one trade I got that seems to be right. So let me milk it for as much as it can, and that's when you get fucked.
Yeah, exactly. Like it's so hard to make like those huge trades. Like the way to make money in the stock market is to find a range that works, and that works 80-90% of the time, where you have good risk reward. That's the way to do it. You can't be you can't be trading just looking for like these massive moves. And like there is some guys that do that, right? So but the guys that do that, the guys that I know that do that, like I know people who are full-time day traders and they only trade like 10-15 times a year, because their criteria is so strict that like if anything is 0.5% out of whack, they don't trade it. But that's the same thing, right? Like they're looking for that specific move and it has to be perfect. Like I'm gonna tell you this. So I was talking to my buddy the other day, and he's just like, he was talking to me about like Robinhood, and he's like, oh, Robinhood's selling off this week. Like maybe you should like get into a short position or whatever. And I look at it, I'm like, no, that's like too expensive for me. It doesn't really have like the right setup. And then a few days later, he he tells me, he's like, oh, SNDL, Sundial, like one of the weed companies. He's like, oh, that one's like spiking up, like, it's pretty beat down. Like maybe you should get into that short. I'm like, oh yeah. So I go and I look at it, and it was only like 95 cents or something. I'm like, oh, that's too cheap for me. And he starts laughing. He's like, man, I gotta call you the Goldilocks trader. He's like, I gotta call you the Goldilocks trader because like it's like too much or it's too cheap. He's like, it's gotta be just right. And like I love that. So like I'm coining that term. I'm stealing it from him if
Goldie.
anybody asks.
We'll get it printed on a T-shirt.
So, yeah, like it makes so much sense, right? Like you want to be the Goldilocks trader. You want to be like, it's too hot, it's too cold, like it's just right. Like it's gotta be just right. Otherwise you don't trade. And that's how you make money, right? It's gotta fit your criteria perfectly. Otherwise it's not worth the stress.
Forget even like making
So
money
on
though.
this one
Imagine
here,
like
like for the short,
oops, sorry. I just want to cut one more thing. Like
yeah,
forget even making money though. It's like if you don't refine your criteria to really set an understandable a few criteria, then like if you get it wrong, how do you even figure out where you went wrong? It's like so many things that could be, you'll never learn.
yeah, exactly. Yeah, so if you're trading like a little bit of everything all the time, you're never going to get good at something, right? Like it's when you first get in the markets and like, even if you've been in it for like a couple of years, like, you're still kind of trying to trade everything. You're still trying to find like your niche or whatever and figure out the best setups for you. But like you really have to just narrow it down and just like, it should be like just boring. Like it's like, oh, this setup only happens, 3, 4 times a week. Well, just only look at that one that happens 3, 4 times a week and just get fucking good at it to the point where like you can smash those trades with like in your sleep with your eyes closed because they work out like just perfectly every time. And then after that, you can start expanding and look for another setup, right? But then, like the nice thing about that is, like if you have that base setup that you can make money on over and over and over again, then if you try to learn something else and it doesn't work out, you can just go back to the old way, right? And you get money back again and then try something new. So like it's kind of counterintuitive, like people think like, oh, the stock market, there's so many different kinds of trades. Like I need to know how to do everything. I need to go long, I need to go short, I need to trade large caps and small caps and all these different companies. And that's not the way to get good at something. Like if you think about any profession in the world, like if you think about like a doctor, you specialize to become a brain surgeon. Like you specialize to become like like an orthodontist, like a dentist. Like you specialize to become like a civil engineer versus a mechanical engineer. Like you don't go to school for just like general health and well-being, and then all of a sudden you're operating on people's brain. Like go to school for I don't know, chemistry, like chemical engineering, and then somebody says, oh, here, go build a bridge. Like it doesn't transfer, right? Like you have to specialize in one area and then you can move on to the next thing. So it's the same thing here in the stock market. You just have to look at them as like different disciplines, like different careers. Essentially, it's how that worked out.
100%.
So yeah, anyways, back to this thing. So if we look at these lines, like again, if we look at the short side, so this top line here, let's say that's our next daily resistance. So what we're trying to do here is find like, where do we get in, where do we get out? So like if you want to start sizing into this one again, like it's the same thing, you're using like maybe 20, 30 odd percent of your size, like up into this pop. So if I wanted to size in this line, I might get in a little bit here. I might have another order on the line, another order like over the line. So in this case, like maybe I only got in like this first order. That's fine, right? Like that's all I got. That's all the market gives me. So when it turned down here, for me, I would cover into this uptrend line half at least of my starter size, and then I'd cover the rest into this line here because that's the next support. So when it hits either one of these two lines, it could bounce, right? So if it hit this first line and then it bounced up, then I'd probably take that off for break even, and then at least I made half of my profits on this little piece here. Yep.
Question: Are you setting your orders exactly on the dot to the penny where those lines are, or are you trying to front run the market a little bit?
So usually what I do is I'll size in around it. So like if I have, let's just say my line's like $4.57, for example, I'll do an order at like $4.47, $4.57 right on the line, and then like $4.67.
Right.
So I'll do like 10 cents around the line, and that'll just give me like a little bit of a range to work with, right? Because like best case scenario, my average is on that line. So if I go a little
Right.
bit below, right on, a little bit above, and if I get all three of those filled, my average is on that line because that's how I calculate my risk. Like I calculate my risk, say it's like 20 cents or whatever on like say 1,000 shares. So like I'm gonna risk, $200. Then I need to fan those orders out so that's gonna end up being my risk. And like you could change them. Like I could do, if it's 557 or whatever it was I said, like I could do like 555, 557, and like 560 or something like that, like a tighter range. Or I could like widen it way out, like I could do like 535, 557, and like 575 or something, like whatever the ranges I'm working on that particular stock, based on the fundamentals, based on the range that it's shown me in the past, based on like a bunch of different things that like I just use for my own style. Like I'll just basically aim to have my average on that line. That's kind of the goal for me.
Gotcha.
So in this case, like that's how I would kind of start sizing into that. But then, so it's like, okay, when do I get into this thing full size, right? So you never want to chase something down or chase something up. Like that's the worst thing you can do. You always want to buy. If you're long, try and buy a pullback. If you're short, try and buy, a bounce, right? You don't want to chase that, because then it's just gonna stress you out, and it's not fun. So on this one here, if it breaks down and, I've already covered everything, it's like, oh, okay, well, too bad I covered everything. If this thing just goes all the way down, straight down to zero, and I can't get in, then I can't get in, right? I missed a huge opportunity, but there was no opportunity for me to get into the trade. So what I'll do is now I'm like, okay, so we've broken, right here, we've broken the uptrend line. So now to me, the stock is dead. Like it's backside of the move. Everybody who's been buying this thing, they're looking for a point to sell now. So where are they going to sell? Like logically, right? It's the same thing we talked about on the way up here. If you're buying over here on this dip, you want to sell up into this line, right? You want to sell up into here. So where are all these people going to be looking now that this thing's turned around? Where are they going to be looking to sell? Well, they're going to be looking to sell up into the next resistance line. So that's where I want to get short, because I know that everybody who's long is going to try and sell there as well. So we just do the exact same thing, only this time I'm going in full size. So I'm going in my full, 1,000 shares or whatever, instead of 200 or 300. So, I'll do like, maybe 300 shares here, 300 shares on the line, and then, 300 or 400 over the line. And, in this case, maybe I only get, two of them on. So I only get, 70% of my size. And then it comes down. Where am I covering everything? I'm covering everything into that next line right there. So if I go, let's draw a line here so you guys can see.
I don't know if you were intentionally trying to, but you've inadvertently described the psychology behind Head and Shoulders. Like you drew one there, and you literally just described what happens with the Head and Shoulders.
Oh, yeah, yeah. But yeah, so that's pretty much it. And then and so that's what I do. I'd short into this full size because we're backside of the move. That line's shown that it's tested here. It broke through. It has previous resistance at that line. This is where it broke down from. So I'm in full size and I'm covering everything into this line. And then when it washes way down and then, it goes another $1 or $2, I can sit there and cry and be like, oh, I missed out on all this money. But that doesn't matter to me, because at the end of the day, like this right here is the move I was looking for. I was looking to get in here and get out there, and that's it. Because I don't know, like this thing could bounce off here and it could just rip right back up and reclaim, and then I'm screwed. And then I'm even more pissed because I had a big green trade that was to my plan perfectly, and now I'm back underwater, and then I'm going to be frustrated. I'm going to try and add into stuff where I shouldn't be adding, and then I'm going to take an even bigger loss than I should have. So I think the summary of all this is really just, first off, know which side of the trend you're on. If it's on the side of the trend and longs are in control, if you're a long trader, you can be going in full size on dips into good support lines. And if you're a short trader, I would say if you're new, don't trade the front side at all, because it's not worth it. Or if anything, trade it very small into like really big resistance levels, like where there's big volume on the daily chart from previous days. And then if you're short, go full size on the backside and just take it into the next resistance line. Like don't try and fade these things down to zero. It was like I traded, what was the one, Peloton, when I shorted that, beginning of this year or whatever it was. Like I shorted that around, I think it was like $105 or $110 or something was my average. And I had a goal from the start of that trade to cover it. I think it was at like 85 or something, or $84. And because that was the next line. Like I saw that line from like 4 or 5 months ago. That was where the support was. So, I'm like, okay, this thing, their treadmills just ate a dog and it, killed a bunch of people or whatever the hell they did. And, COVID's kind of winding down. So I just figured that their company was going to take a little bit of a hit. So I shorted it based on the chart pattern, based on that news. And then I covered everything in little pieces down to that 80 level. And then it hit that 80 level, like almost to the penny. And I think it came like right back up. I think it's like back up to where I had it, or I think it's even higher now than where I shorted it originally. You could probably tell me, David.
What did you short it at?
But yeah, like that's great. Sorry?
Well, where did you short it at?
Yeah. I shorted it like around 100 and something bucks. It was like $105 and I made like $20 a share or something like that. It was over like a month or two, I think was how long the trade was. But yeah, like that was the thing though, right? Is like I shorted and I covered based on my plan. Like I didn't get halfway through and be like, oh, it's tanking. Like, maybe it's going to go to $60 and I can make all this extra money. Like, no, that's not the way I trade. I got in where I wanted to get in. I held it and I got out where I wanted to get out. And then it bounced all the way back up after I got out. So that would be one of those situations where if you try and hold and be a hero, you're going to lose.
Yeah, bounced back up to 130 back in July, came back down again, and then right now got rejected just under $100 after earnings, or just before earnings. Yeah. Oh shit! I didn't even see. It kept down so much after earnings. It was blocked by my indicators were blocking where the price was. Holy shit! It's $50 now.
Right.
It went so far down. It didn't even see it. Now? It's $50.
Oh shit! Okay. I'll see. So I should have held it. There you go.
It was so
Is it really?
Yeah. It gapped down so much that I couldn't even see it.
Is. Holy hell.
What is that?
Wow.
It's almost a 50% drop.
Okay,
Holy shit.
Okay, yeah, but now that I have the chart open, I can see. So it was in we won't pull the chart up here, I'll just tell you guys. Oh yeah, you got it there. Perfect.
Thanks, Sam.
Yeah, so it was where was it here? April. So David, if you can just kind of hover over April so that everyone can see where it was.
It's Sam's, I think.
Oh, is that Sam's?
Yeah, that's not my screen. It's Sam's.
Oh, okay, yeah.
Thanks,
so Sam, right where it kind of popped up. Yeah, exactly, right there. So that's where I started getting into it, and I use the same technique that I always do. So if you look back to November, where it had that other previous top, because this is kind of like a head and shoulders, yeah, right there. So where it had those previous tops, so that was kind of where I was risking off. So I started getting into it small, and then if you look back over at April, we had kind of that line at like the one. I don't know, maybe like the 115. There was like two tops, and then it went a little bit higher. So yeah, that's perfect. So that was kind of like where I was slowly sizing into. So I got a little bit in like the 120s, I think it was. And then as it started to turn around, once it failed below, that right where you're at there, Sam, that line. Once it failed back below those two prior tops, then that's where I started to get in full size. So I think my average was like 105 or 106. Yeah, right there, that line horizontal right across where you just had your mouse. So that's where I started. That's where I got in full size. And then you can see, there was that one big red candle on huge volume where it dumped right down to like $80 or $82. So I covered everything. Like I covered everything through that one day. I just had all my orders out. And then look what happened. It just grinded. It bounced all the way back up to where I got my first orders in originally. So I would have been down, like $15 a share for how long is that? June, July, like for 2-3 months, I would have been down like $15 a share if I didn't take that all off into that wash. Yeah, exactly. So yeah, paying interest on the short and everything. So, but that's the thing. Like that was the plan. The plan was to get in the 100s, cover it at the 80 line where that previous support was, and that was it. So that like worked perfectly. And that's a great example of why you don't want to hold and just say, oh, we had a big red candle on volume. Like, maybe it's going to keep going down. Like that wasn't my plan. My plan was to get in the 100s, cover it at the 80 line and get out and be done with it and forget about it. And then, here, sure, you could say, here we are 7 months later and it's down at $50, but like, that's how the hell am I going to?
No, that's a completely different play. If you got into that, it would have been like, because you saw something recently.
right. Sorry about that. I just got kicked out. My internet's not being the best out here. Pretty sure we have a storm rolling in. But anyways, that's pretty much everything we wanted to go over today, guys. So yeah, we'll catch you on the next episode. I think David's going to talk about some of the news that we had over the past couple of weeks with Tesla and Rivian and all that stuff. So stay tuned for that. Remember to like and subscribe.